Hello and welcome to Trading Growth and Value Stocks. My name is James Boyd. We welcome you here today. Today's date, November 5th. My gosh, has anyone had snow yet? It's coming. The weather's been too good lately here in Salt Lake City. I know it's coming. So hopefully I mowed the yard yesterday for the last time and we're buckled down. So we'd like to welcome everyone here. We got JQ with us here. Bill Barnhoff, or also known as BB. I'll just do initials. KB for Kevin Baker. We also have Ocean Life, Dean GT, known as Gary Taylor, and also Scott Luck, SL, WW, Will, welcome. And we also have Ben Watson with us. We'll call him BW. So we welcome all of you here today as we talk about trading growth and value stocks. Now, we know that, for example, growth has kind of been a focus as of lately, and a lot of stocks have been pushed to the upside. So finding value has been a little tougher, especially things that have been pushed down, have been downtrending. That's why we haven't been talking about value as much. Now, just remember, Ben and I post educational content on X. Follow us there. Also, remember with what we discuss, it's done for general informational purposes only. And also remember when we talk about examples, they are just that. Schwab does not recommend the use of technical analysis as a sole means of research. Also remember that investing in stocks involves risk, including loss of principal. And also remember when we talk about, or if we bring up dividend paying stocks, it's included to, but not limited to, stocks that may reduce or stop paying dividends. Now, that's the downside, but wonder if they increase the dividend. Wonder if it's a special cash dividend. So the moral of the story with dividends is it's not infinite. They can change the dividend policy. Now, today we'll talk about kind of where the market is. We've been dealing with a market that's been pulling back. We've actually had some weakness as well. I want to kind of start off by talking about that first. Second, then I want to kind of talk about some stocks that we don't normally talk about as much in the S&P 500, okay? And then we're going to kind of work our way back into some of the things we typically talk about. But first, what I want to do is I want to bring up, if we could, I want to bring up the $ SPX A. Now, by the way, when you do this on your side, you're going to see when you type in $ SPX and then stop, or $ SPX A, you're going to see that you can see the number of stocks above the 50-period moving average, which is 50R, stocks above the 200-day moving average, which is 200R, and you're going to see that we also have the percentage of the stocks above their 100-day moving average. Now, this is a chart that Kevin and I discussed on Friday. And I said that this chart, so this is, take a look at the percentage of what type of stocks. S&P 500 stocks, okay? Now, as the market goes up higher and higher and higher, less and less stocks sometimes are above their moving averages. People sell into those gains or the upward trend. Now, lately, what you saw in the last month or so, we saw that the percentage, now let's kind of get an idea of how do we read this, 0.39 or 39% of the S&P 500 stocks are trading above their 50-day moving average, which is not high. Now, remember, I kind of said on Friday that if we want to kind of see some leadership, we want to see some breadth. When we say breadth, we're not talking about our breadth. We're talking about other sectors participating, not just one or two. Does that mean the investor cannot play the one or two sectors going up? They could. It just, it can be a little riskier because more and more investors might be stacking into those areas and trying to ride the more dominant type trends. If we were to look at this and say, has anything really changed since Friday? The answer is no. We can't say that. The percentage of stocks above the 200-period moving average, or excuse me, the 50-period moving average is 35%. You got a little push here, but we're still near the bottom of the zone. Now, if we looked at sectors for just a moment, I went to MarketWatch just for a second. Let's go down to 3 here for the sectors. Remember, we do not want to just see one or two sectors at the top, and I'm thinking that's what it is. Let's confirm it. Now, without even looking at statistical returns, well, all I'm going to do is I'm going to rank this by the RS5. This is looking at the performance of the sector compared to the S&P 500. Now, if we saw light green boxes, or excuse me, dark green, that would actually tell us that those sectors are performing stronger than the S&P 500. When I pull up this list, and it's still loading for me a little bit, where we do see a little bit of a push. Now, by the way, when we pull this up, there's the S&P 500, okay? And so we know that's not what we're looking at. That's the benchmark. Where we do see a little strength is in what? The transports. We also see some movement in the financials, IXM. There's the SOX, there's the IXV, and there's the discretionaries. So from what we can tell, there is a little bit better, okay? So transports, financials, semis, healthcare, discretionaries. That is where we're getting the push. Do we actually think that the staples are actually showing relative strength? Ha! It's funny. Relative weakness, okay? They've been dogs. Speaking of Jax, my dog, he's sick. So keep him in your thoughts and your prayers. Literally, might have to take him to the vet today. Usually, Sparky the bandit is running all over the house. Not yesterday. He's trying to get better. So keep him in your thoughts and prayers. Literally, it's not looking good right now. Now, also just real quick, when you look at the energy, is that strong? I'm going to say if we got that to load right there, it's probably neutral. And this right here, we don't even count. So there's 5 or so sectors. 5. Okay. Now, what I want to do, so I want us to continue to watch that. Now, when you look at the SPX in terms of a chart, I think this is important to kind of watch. Now, there's something good and bad about the whole moving averages. The good is they're weighted and they're closer to the current price. The bad part is they're weighted. And when the price pulls back, it kind of gives the appearance that everything is horrible and it's the end of the world. I mean, that's sometimes how it feels. Or is it? Well, this is where some investors kind of like to slow things down for a little bit. So when we say slow things down, what do I mean by that? Well, let's just kind of bring up moving averages that are not so weighted. If we brought up the SPX on this chart, which is the weekly chart for just a second, we'd have to kind of just grab ourselves and maybe shake ourselves a little bit and say, why do I feel so vulnerable? Why do I feel so defensive? Because when I look at this chart on the weekly basis, it looks like a 45-degree angle, and that 10-week moving average is still to the upside. Now, here's the problem. When the things move up, things move down 1%, 2%, 3%, depending upon what you have, depending upon also, for example, how much of your portfolio you're actually invested in, it sometimes can feel worse. When were your last entries? If you establish a whole portfolio on Thursday, you feel more of that pullback, okay? Now, the other thing is if we look at this on a daily chart, you're going to see that if I look at that chart on a daily chart, you're going to see that we haven't even fallen back to the 30-period moving average yet, which is represented in red. Okay, so anything unusual here? Nothing really, okay? We've had pullbacks like here. There was this kind of more of a sideways consolidation. There was an actually touch on the 30-period moving average. There was a touch on the 30. There was a touch on the 30. This was a harder drop when they actually kind of, the White House kind of tweeted something out and it pushed the market down. And you're going to see that this actually has come right back to where the old breakout area was. Now, so all that stuff was nice. The only thing that we care about as investors right now is, drum roll please, we want to know, is it going to bounce now? That's what we want to know. And so that's why the market breadth, the width, this number of sectors participating is going to be critical. Obviously, we need tech, semis, kind of think of those two together, discretionaries. We need those sectors to lead the bounce. Okay? Now, I want to kind of talk about so first off, are there any questions here? Now, Kelly actually says, I'm not nervous yet. Kelly's never nervous. He's cool hand Luke. Now, here's the deal. If we take a look at, let's say, the VIX, which we've kind of brought up yesterday. Remember we said with the VIX, we always want to kind of see that the VIX rallies, maybe gets above 18, and then starts getting some selling pressure. Now, remember, we want this chart above the 10-period moving average. No, we don't. Well, if you're looking to buy, maybe you do. But if you're looking for things to bounce, meaning prices of stocks, indexes to bounce up. You want this chart to smash down. You want this chart to get below its 10-period moving average, get below its 20-period moving average, and push down. If it does, more bullish bounces than the indexes, more bullish bounces above their 50-period moving average, more bullish bounces on individual stocks. Okay, now, what I want to do is I want to kind of talk about, just real quick, speaking of that leadership, just real quick. When you look at the, let's say the IXT, when you look at the IXT, this is going to be something we want to kind of see get a turn and a push. It's kind of more like at a diagonal level support. Now remember, it's that when we say technologies, I'm also going to be saying in this case semiconductors, which has been the industry group, which has been leading the move, or I should say the charge, to the upside. Now, we can look at the sector, the industry group, but we could also look at some individual stocks. Now, if we were to draw diagonal lines of support, there's a couple, they're kind of at that bounce area where we've bounced historically. Could that continue? Now, if I asked you a question, okay, are there any semiconductor stocks that are getting a little bounce here? Any? Now, I'm going to, before I just kind of look out of the corner of my eye and see if there's any answers, of course we would be thinking about NVIDIA. It doesn't always have to come through NVIDIA. Is it getting a little bounce? I mean, it's an up day. Is it closing above yesterday's high? Trading above yesterday's high? Not yet. So we can't say NVIDIA. But if I looked at, let's say, something like QCOM, what about this one? What about QCOM? Well, yesterday being the lowest, most recent red candle, is today a trade above the high of the low day or close above the high low day? No, can't say that. Today we also have earnings. This is going to be big in terms of, can we actually get a little push to the upside here? It did break out a horizontal after hours. This is going to be really interesting to kind of see, is QCOM joining the semiconductor party. Now, also, Chris actually says Avgo. Avgo, if we actually took a look at this and said, is it close above the high of the low day? It is. What type of candle? It's a bullish engulfing candle. Is that a good candle? It's a strong candle. It's the strongest one we can get, okay? And if we look at that, it's starting to turn. Is it actually getting above yesterday's high? Not yet. We would actually say that this one is better than the two previous we looked at based upon the type of candle. If we go back to, let's say, AMAT, and we actually pull this up, what's the lowest, most recent red candle? It was yesterday. Today's candle, being like Avgo, Chris brought that up, bullish engulfing candle, trading above the high of the low day, and you're going to see when is the earnings. Now, the earnings is on the 13th, so there's about a week left here, okay? Now, so AMAT we would have to flag. Now, let's kind of write these down, okay? Let's see if I can. Now, I'm going to put these right here. So a couple stocks that we're going to kind of keep an eye on. Now, by the way, let's summarize this just really quick, and some of the sectors, and then we're going to write down some of the stocks. We're going to actually write down AMAT. If we actually pulled up the sectors, we actually said we're going to keep an eye on. By the way, we are going to keep an eye on. I'm going to write down IXV first, which is the healthcare, which has been fairly decent. The IXM, there are some financial stocks that have held relative strength. So relative strength does not always mean that they have positive returns. It could actually mean that they went down less than the sector, less than the industry group, less than the market, okay? Now, when I look at this, I'm also going to bring up, let's say, the IXM. We did that. The other one is the SOX, which we're going to highlight a little bit, and you're going to see that I'm also going to include the discretionaries, the IXY, and I think that was it. Now, the other one that we're going to kind of keep an eye on is maybe, could gold get a little bounce here? That's the other one in a 5-day period of time that there has been a little push there. And the one that I missed, and someone should have said something. You guys and gals, don't just sit there and watch me make a mistake. It was DJT, the transports, okay? Now, when we say AMAT, we're also going to say LRCX, okay? And we're also going to say MU. Now, let's pull this up for just a sec. What does LRCX look like? LRCX, is it close above the high of the low day? Well, the lowest, most recent red candle day is the 31st. Not yet, but trying to get a turn. Now, what causes the turn? Maybe the types of candles themselves. How big are the candles? Can the price get above the 10-period moving average, right? Can the price get above, let's say, the 20-period moving average? LRCX is one that stuck its nose back above the 10. That's not a bad start. Is the moving average gone green yet? No, but it's turning. Now, here's the thing. We have to start getting a list of what stocks might be trying to do that. And the last one we kind of say has the strongest, which I kind of left to the very end there, is actually Micron, okay? Now, a couple of you are also making mention of two other stocks. And those other stocks, which we'll look at as well, is STX, which is Seagate, and WDC, Western Digital, okay? Now, let me just kind of show you what these look like, and then we're going to look at the fundamentals and look at the trades. STX, this is what it looks like, okay? And if you brought up WDC, this is what it looks like, okay? Now, what I want to do is I want to start to make this a watch list so we can kind of see the relative comparison. Let's create a watch list. We're just going to name this 11.5 if you don't mind. And I'm going to put some of these stocks in a list, okay? AMAT, LRCX, we got NU, we'll put STX, and you got WDC. Now, I like to put in here like a benchmark of the SPX, and I'm also going to put in the sector, okay? Now, I got the S&P 500, the sector itself, and we could even take the industry group, the SOX itself. Now, from here, it would be just kind of interesting to see statistical differences. So let me show you what I mean by this. So when I look at the weak percent, okay, so let's say we kind of use SOX as the benchmark. Well, the SOX, it's down 2%. So anything that has relative strength, it would just need to have a negative 2.77% return or higher to outperform the industry group. Well, everything in the sector does. That's a stock. That one, that one, that one, that one. So if we're talking about a weak percent, they all do, okay? Now, if we said a monthly return, well, I got to get a monthly return of greater than 4.39. Now, if I look at the individual stocks that are located at the very top, LRCX and above, they're all above that. That's what we mean by relative strength, okay? Reminder, it doesn't have to have positive returns, just less bad. Now, if we take a look at this, I'm going to go back to, now, if I were to ask you, now, by the way, on the right-hand side for just a second, okay, do you notice anything about what we're seeing on the columns? Well, there's a couple of holds. We already made mention of that. Yeah. One thing that we do notice here, we're seeing a breakout on the 20 and 55-day high. 20-day would be like a shorter term high. 55 would be more intermediate. They're showing a breakout today. But the other thing that we're noticing is some bull flag type setups. Now here's the deal. You could buy these in the paid money account. Doesn't mean it's going to go up. It's just a setup. We have to see over time how it plays out. Now, if I were to ask you a question like, well, which one would you pick? Which one would you pick? Okay. Which one would you pick? Yes. Now, BJ, I'm sorry. I got to wash my mouth out with soap. Yes. Fleeg. Okay. Now, what I'm going to do is, if I look at this, I just want to kind of see which one do you want to actually look at in terms of a paper trade. Now, I want to kind of pull this up just real quick. Go to Analyze. Let's go back down to, let's say, Micron for just a second. So when we talk about the fundamentals, we're talking about the revenues, we're talking about the earnings per share, we're talking about the free cash flow, right? We're talking about maybe some of the metrics like PE, price of sales, etc. If we go to Analyze, Fundamentals, you're now going to see that these are historical numbers. By the way, price and volume is historical too, okay? Price and volume, what it was yesterday doesn't mean today. Same thing with fundamentals. It's just giving us kind of a report card of where that stock has been in the past, like price and volume. Well, if we look at these numbers over time, and I like to look at sales per share first because it all starts with revenue. You don't get earnings without revenue, okay? Of course, like in your life, you don't want to just make 100 grand, you want to make 110. And next year, you don't want to make 110, you want 120. And then some of you are saying, I couldn't live on 120 to save my life, I need 150. The moral of the story is that's what the company feels. They want to see the revenue, which is broken down into revenue sales or revenue by share. They want to see these numbers increasing, just like you want to see your top revenue number increasing. And I should say your spouse wants to see that top revenue number increasing. Okay, so think of the sales per share as the amount of money you're bringing through the door in the calendar year. Think of earnings per share as your savings. What does your spouse want to see? Of course, they want to see that number higher. Now, whether it happens or not, it's up to you both. Okay. Now, we did actually see a little drop there in actually 23. We saw a pushback up in 22. The biggest actually thing what we have to understand is sometimes when you talk about technology, products or services, it's not always a 45-degree angle. Sometimes the technology stagnates and it takes time to develop it. There's costs associated with that. And people might be waiting for the new technology to come out. And that's why sales sometimes is not just a 45-degree angle line. It also comes down to maybe the economies, how the economy is doing. Are the companies willing to spend, etc.? Okay. Now, what you're now going to notice if we look at quarterly, you're going to see that in the last, let's say, the last quarter that we actually had, 717. The previous quarter right there was 689. Now, if you look at that, if they were able to do that again, if they duplicated that, you're talking about 14, you're about 28. Okay. Now, whenever we talk about the future, we don't know what the future is going to bring, but they're thinking, could that continue? If you go to schwab.com, you can actually look and see what their forward estimates are. Estimates is not the same word as actual. Okay. Now, if we take a look at the number right there, we went from a negative to a positive, and we go back to quarterly and say, what was the earnings per share? Well, that earnings per share, which, by the way, on the annual number was actually negative in 2024. In the quarterly number, you're going to see that just the last quarter by itself was 283. So a pretty big pump on earnings per share, 79, 167, 141, 168, 283. So a pretty big push. But again, it all starts with revenue, okay? Now, does it pay a dividend? Not much, 46 cents, okay? When we actually take a look at, let's say, how much are they paying out of the earnings, we could see what that yield is. That yield on this, we pull this up. What is that number? Answer. Okay, yeah, not much. So they paid, the number we actually saw, so let me go back to this, we'll verify. That was in 424, okay? So that number that we're seeing right now on the trade, they're showing 11.5 cents. Check me on that. Doesn't really look like that's a big dividend yield, but the biggest thing to kind of remember here is some of these tech companies, they're not paying out yield. They're trying to get price appreciation on the shares. So what we're going to do in this case is, now remember, the nice thing about a pullback afterwards is the pullback kind of lets us know where we might be wrong. Now, some investors, they might say, James, if we go below 218, we go below that, I'm going to get out. Second, if we go below today's open price, that would not be a good signal. I'm going to get out, the investor might say. So the first trade example that we're going to do. Now, by the way, the comment really came up on, let's bring up this. Now we can look at RSI, CCI, ADX. Think of these each like a sentiment gauge for just a second, okay? Now, if I pull this up, and if I pulled up, let's say, the RSI and say, well, where is the RSI for Micron? Well, Micron has kind of been closer to that overbought area. It's not bad. It's just saying, hey, look, there's been some interest here, okay? The last time we actually had the RSI in that 40-ish area, it was right back there in August. I know you wish you could go back and say that's where I got in. Next time when the market pulls back, instead of putting our heads in the ground, so to say, and feeling bad, we might say, wow, I'm going to keep an eye on an opportunity. So always remember that. Pullbacks don't tend to last forever. Pullbacks could be manna potentially from the sky. Okay. Now, there you go. So now the comment was on the ADX. I pulled up the RSI. Now what I'm going to do is I'm going to right click on this chart, buy custom, and I'm going to put with stop. Okay. Does every trade have to have a target? Not necessarily. Okay. But if we took a look at this, I'm going to set the stop underneath today's open price by 2%. Now, if we did less 2%, it's going to be 220.72. 220.72. Now, stop day GTC. Now, one of the things that's hard about when you have a company that's had strong fundamental numbers, you know what happens, right? We all get greedy as investors. We want the numbers to get higher and higher and higher. The problem is it becomes harder and harder for the company to beat those numbers. That's the bad part. So the question is, can that continue? That's why on Schwab.com, you can actually go see what those forward estimates are of the company themselves, which they are estimates, but you could also see how those estimates compare to their peers right on Schwab.com. Now, if you pull this up, if we go to confirm and send, I'm going to go back and just kind of put the number there. So if we did this real quick, and thought that was in that paper money account. Let's go to MU for just a second. Let me actually match that number, just kind of make sure we're in the IRA account. It is. Type back in MU. We're going to right click on the chart. Let me just match that stop. I just need to make sure it's properly position size. The stop price was 220.72. Okay, 220.72. Stop date dated GTC. And now what you're going to notice is the position size we're going to put in is no more than $7,500. $7,500 on a 235 stock, it's going to be about 30 shares of stock. Now, Pia says, would you consider a type of derivative? Pia, you should never ask me that question. Of course, I would consider a lot of things. This class is a stock class. So in this class, we're going to do stock trading. But usually on these type of technology stocks where they have higher price fluctuation, sure, an investor might consider that given the volatility. Okay. Now, in our example, now, by the way, this kind of brings out a question that was asked also last week. Why sometimes are you buying shares of stock? Answer. Well, because if we're sitting in an account where half the account is cash, we're trying to use 70-ish, 80% of the cash. Why? Because we want to invest it. Why? Because a stock has a dollar for dollar rate of change. Stock goes up $1, the profit goes up $1. Okay? So we're trying to invest that capital. So the biggest thing is what we're going to go ahead and do is go confirm send. Send that trade right there. Now it's saying rejected. I'll fix that. It's in my paper money account. So number one is we're picking up MU. Okay. We're not putting a target on that, at least today. But if we went back and really looked at this kind of goes back to there's been highs throughout. And by the way, this green shading has been literally green for a while. The biggest thing that we want to kind of see here is, can the separation of the moving averages stay where they are or widen? Why do you say that? Well, because if we start getting the moving averages where they become tighter and tighter and tighter and tighter, it's kind of showing us on the chart that we're losing momentum. Now, let's go back to the two that we don't talk about as much, and we should feel horrible about this, okay? Now, if you go back and look at Western Dig and Seagate, now, if I pulled up, go to the Analyze, go to Fundamentals for just a second, what do they really do, okay? Now, the deal is here is they do hard drive technology. So you could have software, but you got to have hardware to run it, good hardware. And if you take a look at this, what you're now going to notice is something a little different than we normally see. When we look at sales per share, at least the numbers here, and I would verify the last 2 years, those numbers have dropped. Now, they might have communicated to those investors that these numbers were going to be negative. But what we're now going to notice is also on these numbers on the earnings per share, it's also been negative. Now, this is very interesting. If these numbers were literally the way they are, The company told investors that's going to be the way that it was, but they were probably telling those investors, hey, we think these numbers over time are going to come back up. Okay? Go to schwab.com where you can actually check out those numbers even more. Now, when we look at these numbers, you take a look at these. Sales per share in Q4 was 11, 25 was 6. Okay? And again, remember, it's not all equal throughout the whole entire year. If you want equal, go look at Walmart. If you want equal, go look at companies that are like Procter & Gamble, things like that. These companies will have seasonality to them, meaning some quarters would be higher than others. And if you look at the earnings per share, go look at these numbers. They've been consistent, a little bit less on the Q2. Q1 was stronger, okay? Now, if I go look at Seagate for just real quick, I want to see the difference. What's the difference in Seagate? Well, Seagate, what you're going to see is data storage, okay? Which, by the way, almost everything's data these days. They're in the same space. Hard disk drives, okay? Solid state drives, like a backup drive, things like jump drives, things like that. And you're going to see that they're in the same neighborhood, right? Now, if you take a look at this, we can also go back to just real quick, pull this down for a sec, analyze. This has more numbers than what you would probably normally see, okay? If we said which one has been a little stronger in terms of some metrics, we'd probably say Seagate over WDC. But you got to remember, it's how the company positions itself with investors. What do they tell them? Did investors feel okay about it? Okay. Now, if I pulled up Seagate and pulled this up and said, okay, I'm going to, in this case, based upon where this chart is on Seagate, what we're going to do is we're going to kind of take a look at this old high. Some investors, they like to kind of see this U-type pattern. Now, if I pull up this pattern on that weekly chart right here, it's really going to show, and let me change it to the weekly, it's going to really show something that doesn't even look like it pulled back. So the pullback is kind of more apparent on that daily chart. Now, if you look at this chart, this is what we call the trend candlesticks. And these trend candlesticks is just, if we get darker color green candles, it's just telling us the price is above both moving averages. Price not up near resistance. You can get the stock up near the high, but the old high is not resistance yet, okay? Now, what you're now going to notice is the trend, could this old high become the new potential low? Now, James L. brings up something very important. What is James L. saying that's so important? So a lot of times we look at this and all we see is $26, and we're just like, man, if I could get one day of that, I would be happy. You got to understand something is here. It says the stock goes up a higher and higher dollar stock price, the ATR is becoming bigger and bigger and bigger. And so the investor, to be prudent, needs to allow for fluctuation. So in other words, if we go down $8 tomorrow, does that mean anything? No. If it goes down $10 tomorrow, does it really mean anything? No, it could just be fluctuating. Let's imagine you have $1 million in your checking account, and your checking account goes down $500. Does it mean it's downtrending? No. If it went down $1,000, does it mean you're downtrending? No. You just had a pullback, okay? Same thing with this. So this is actually it just fluctuates more. Now, the one thing we want to kind of do is the more it fluctuates, the more the investor might say, I'm not going to put my whole position on at once. Now, what I'm going to do in this case quickly is I'm going to right click here and I'm just going to nibble. I'm going to nibble on just like a half position. Now, what I'm going to do is going to go buy custom with OCO bracket. And what I'm going to do is instead of buying the whole position, I'm just going to say, look, I'm going to do 37.50. Now, if we did 37.50, James, where's the other 37.50 going on? Well, where do you think it's going to go on? Where do you think it's going to go on? A, if it goes at or above today's high, maybe. The second area we're going to try to add to the position is if we go down to the middle of today's candlestick. Okay? So that's where that second add is going to be. So what I'm going to do is I'm going to set the stop underneath today's low. Today's low is going to be 256.08, less 2%, 250.95. Okay, so I'm going to type that in, 250.95. Now, if we talked about the target, okay, if we said, well, this kind of has a price pattern where we can measure the potential target. Well, that target, if we kind of looked at the bottom, I'm going to say about 215. Might not be at the very bottom. We got 260 as the top. This is going to be, if we could get it to go, if we could, it's about a $45 width between that and that. That would actually give us about a 305 price target. Not everything has a target on it. Sometimes it's easier to see what the target might be, but the 305. Now notice right here is I'm not putting on the whole entire position. I won't take the time to do the second, but if we did the second order, we would put an order at a buy limit GTC at 268 with the same stop, 250.95, and the same target, 305. Okay? Now, why are you splitting up the order? Well, because if this fluctuates, that ATR average to range $16, we're trying to catch it on some fluctuation, which means we're trying to dollar cost average. Okay? Does that make sense? Any questions with that? Now, this might reject me, but don't worry, I'll fix it. Or what we could do, let me just move it just real quick to the margin account. That shouldn't reject it. There's the target. Now, remember how the stop works, okay? If the stock goes down to that price or less, it triggers to be sold. A stop is a market order. And what it's saying is it could fill at a lower price. That's a risk of a stop. Send it. Now what you're going to see in this case is it triggers to get filled, and we're sitting right there. We have a limit at 277.30. And so if the price is trading below that, there's a pretty good chance that it could get filled. Okay? Now, I want to pull up something just real quick. Pia, let's go look at something. Let's pull this up. So first off, if you didn't realize, you can go to actually youtube.com. You can just type in Trader Talk Schwab Coaching Webcast right in the search bar. Okay, right in the search, right there. And it's going to come to this page. If you have not subscribed, all you got to do is subscribe. Okay. YouTube is almost like TV these days. A lot of things to actually see on YouTube, learning things. And what you're now going to notice is just subscribe. It's for free. You're also going to notice that for this class, like any class, there's a playlist for this class. And that playlist, what I'm going to do is let me share that with you. You can bookmark it right on your browser. And you're also going to notice something else that Pia brought up was the in-person events. Now remember, at schwab.com, we don't just have live webcasts and also recorded ones. So we call it live webcasts, which is the calendar there. Okay, on demand, which is what it sounds like, recorded, think TiVo. And you're also going to think in-person events. Now, we have Ben Watson with us, and he knows something about in-person events. Now, the biggest thing is if you look at the in-person event coming up, we're going to be doing a market drive in Anaheim, okay? November 22nd, if you're a Schwab client, you can come for free. You're also going to see that we're in Houston, Tejas, okay? And that's the technical analysis, option strategies. First day, technical analysis, option strategies the second day. And then Pia made mention about the Miami, Florida, okay? Right in December, just a couple days before Christmas. I couldn't think of anything better to do a couple days before Christmas than to be in some nice weather. Okay, it's free. Join us. Now, if you say, well, I'd like to learn more about it, click on Learn More, and you can actually see, well, where is it? It's right at the JW Marriott Miami Turnberry, and you can just obviously copy and paste, search it up, kind of see. You don't have to stay there. You can stay wherever you want to stay, but that's where that hotel is going to be done. Now, coming up, the other question was, well, what about some other areas? We're going to be in Seattle coming up in January, Sacramento in February, San Diego, late February, Atlanta, Denver. So what you're going to notice is any of these big cities like New York, DC, sometimes Boston, things like that, they come to them about twice a year, okay? and they are filling those up as we go. So just keep an eye on that. So if you're saying, I'm in Boston, have we been there before? Sure we have. I remember doing those. Okay. PS says, am I going to be there? I haven't been invited yet, but who knows? I might be going. Okay. And I'd like to bring old Miss Amber with me. Yeah, that'd be nice as well. So just real quick. So let's kind of hop right back to this. Just want to make sure you knew about that. Now, one thing I want to kind of make mention of is let's kind of bring up just briefly a couple other stocks that are kind of standing out. Now, we saw Amazon this last week really have a very unusual, it was amazing. It really was. I watched Amazon like you have for years, and the gap that it actually had was a monster, okay? And that move, really, what you see is, when someone wakes up the very next day and their stock is up 20 points higher than the previous day, some investors just want to sell. And some people sold. Did it break support? No. Gapped up the very next day after you thought there's no way it could go up higher. And it sold off again. Why? Because some people woke up the very next day, they had 100 shares, stock gaps up 10 points, they're up $1,000, they haven't even rolled out of bed yet. Now, that's kind of sometimes going to happen. Now, it could have gone down 10 points. Now, so some people, when the stock gaps up like that, they say, hey, I'm going to trim some gains. Now, that's not to say they're never going to get back in. They might just say, hey, I just want to profit take a little. Okay? So in this case, what I kind of want to make mention of is keep an eye on actually Amazon. It's actually at the point right here where it's had some pullback. And you're going to see that this old area right at about 240. Now, go look at its fundamentals, okay? Now, I also like to kind of look at companies that have announced layoffs. Now, you might say, well, why? Well, sometimes they might be trying to become more efficient. They might be trying to get maybe higher earnings per share, which might lead to potentially higher dividends, maybe. And so keep an eye on that. Now, also, is it always a positive? Well, if you cut employees, you're either those employees have done the work that they were contracted or hired to do. They might have technology to kind of do that work that some of them did. The other thing is, it might be that the company is just maybe struggling in general, maybe like a Target. So it's not always a positive. But keep an eye on the companies where the revenue is increasing, and so is the trend. Now, Kitty Cat, meow. Okay, I don't know what is. If you look at Kitty Cat, that's another one where you kind of see this old high. Okay, now on so many of these stocks, we see an old high, and it's checking back down to where it broke out from. Old high might turn into the new potential higher low. So that is something. So these stocks that have come down, and a lot of people will say things like, I want it to pull back. Well, here they are. Here they are. And so all of a sudden, now these technicians really watch for stocks, which ones are closing above the high of the low day, which ones are starting to get back above the 10-period moving average. Now, I'm going to tell you right now, it ain't that hard in terms of seeing which ones are actually getting back above the 10-period moving averages, which ones are doing close above the high of the low day. So if I said, hey, we're going to look at a list of Dow stocks, which of those stocks are showing close above the high of the low day, at least right now? It's actually Amgen, and it's also TRV. Now remember, scripts are not guaranteed for accuracy or timing, so you need to verify with your own eyes, which means you have an understanding of what it's trying to screen for, and you could verify it. Now, the other thing that would kind of tell us something pretty interesting is if we started getting more and more stocks that were, for example, poking their nose above the 10-period moving average, we should start to see more 10-day moving averages that are green, that are going green. And they're not just green, but they're green in the last day, like that one. They're green in the last 2 days, like that one. They're green in the last 3 days, like that one, and so on. And there's 2 days. If we start to get a bounce after a little pullback, there should be more that are doing that. So when you look at this 10-hole column, this is showing a sentiment gauge. Think like a scale. If there is more green boxes, excuse me, red boxes, that tells you that we're still more in the pullback. If that all of a sudden we start to see more green boxes, that actually tells us that we are actually getting more of that bullish bounce. We're starting to get it. If we looked at it right now and said, are there more green or red boxes? The answer is there's more red boxes. So for more than not, we really actually have more kind of that pullback still. But that doesn't mean that could be going to be that way tomorrow or the next day. So keep an eye on that. Now I'm out of my time here. We walked through a couple trade examples and also kind of talked about some things that the investor is going to want to keep an eye on. Now, also remember that coming up next, we got a webcast coming up right at the top of the hour. I'm going to take off Thursday and Friday, but since I'm going to be at the house anyway, I'm going to teach the trend trading class tomorrow and the ETF class on Friday. So I will be teaching throughout the week, even though I'm technically off. So I want to say thanks for your comments and your participation. Thanks to all of you for a lively session and also some great resources from the Schwab.com website as well. Go out there and practice what we actually discussed. Keep an eye on some of these old highs becoming new potential bounces. Keep an eye on those holds and also those actually stocks where the 10-day moving average could be going back green again. Remember that all investing involves risk. And also this has been the class of trading growth and value stocks. Stay tuned for our next webcast coming up right at the top of the hour. Take care. Bye-bye.